How you doing? My name is Sanjeev Advani. For those of you who have not seen the channel yet, which is most of you, I'm looking to bring you property management, real estate, and construction content in an easy to digest format that is going to help you invest over the long term and learn more about the markets. Today, we're actually going to be talking about multifamily investments. And so there is a company called AvalonBay. AvalonBay generally invests in coastal properties, right? East Coast, West Coast properties. And so what they're looking to do is they're actually looking to move into the Sun Belt, right? And so what's really interesting about that is that most investors who are of the coasts generally don't want to move into that area because there is going to be, lower price. There's going to be, a lot more kind of turnover and things like that, a lot more supply. For example, right now we're seeing a big glut of supply in the Sun Belt. And so their thesis at this point looks at what's going to happen in is that over the time, what they're saying is that basically they'll be able to take properties that are on the coasts that are going to be worth more. They're going to be able to sell those properties and they'll be able to buy properties in the Sun Belt. The problem is the Sun Belt currently has a supply overage, which means that that demand is still there, yes, but the supply being high is keeping kind of returns low. And so the thought process or the thesis for them, at least it seems, is that what will happen is over time that will go away, right? The supply glut that they have will go away, and therefore rents will start to go up, property values will start to go up, and you can start to kind of move a little bit more into that market where you are going to be able to see greater returns over the next period of years. So according to some of the executives there at AvalonBay, they essentially have 1.6% of existing stock in 2024 in coastal markets. They're looking to bring that down to in 2025 to 1.4%. So again, very low, right? And then what they're going to do is they're going to actually start purchasing properties in the Sun Belt. And so essentially what they've done over the past kind of year or so, let's say, is that they've sold out some of their units. For example, in New York, they sold a 229 unit building that for 104 million. They took that money and they ended up making two purchases in the Sun Belt for 203 unit property in outside of Charlotte, and then a 568 unit property outside of Carrollton, Texas. And so basically what they did was they sold four properties, which consisted of a little shy of 1,000 units, and they bought more properties, which were, which compiled to over 1,100 units, right? So they sold a little less than 1,000. They bought a little over 1,100 units, and they were able to, spend about 277 million doing so. So this is North Carolina and Texas, whereas they sold the properties, the 987 units that they had, sold for $446 million. So that becomes really interesting because they did have an increase last quarter of revenues, in the last quarter of 2022 of revenues. Their income was basically the same. There was an increase of about 0.4%, but basically over the following year, then from 2022 to 2023, they had income drop, they had revenue increase. And so what I think is going to happen over the long term here, and what's really interesting is that this is actually a very long-term play. So generally when people purchase real estate, they're looking at, well, when I buy this property, what is this property going to return me today, in the next year, in the next 3 years? This is actually looking at it from a 30,000 foot perspective, in my opinion, and saying, okay, well, as a structural whole, where do we see that more people are going to be moving over the long term? And so their thesis essentially is saying that the Sun Belt is where we think that most people will start to move, and therefore that will decrease that oversupply that we have and bring our properties into a more profitable place where we can now increase rents even further and continue to, basically increase value for our shareholders. So I really like that thesis because you're thinking over the next 3, 5, 10, 15, 20 years versus, okay, this is kind of what we've always done and this is how we're going to do it. And so again, just looking at, kind of bringing you this content because this is going to help with how we invest over the future, right? This is going to help understand how large institutional investors are looking at the markets and potentially help you find and pick new places to do so. So again, thank you for hanging out with me till the end of the video. If you liked it, please hit that like button, subscribe to the channel, leave us a comment if you like what we're doing. we'd love to hear it. If you don't like what we're doing, we'd love to hear it, right? Because what we're trying to do is we're trying to bring actionable content to people that will help them invest over the long term, and doing that in by presenting this information to you in an easy to digest format. So again, thank you for watching. We'll see you on the next one. Take care.